My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to keep it from losing money. My job is not just to entertain, but to educate and teach you, put it in perspective. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Too much speculation, too little stability in the face of a resurgent pandemic. And that is how you get a meltdown like today. Dow plunging 726 points, S&P plummeting 1.59%, Nasdaq tumbling 1.06%, a little bit better. Notice that. Now, but you know what this was today? It was the end of euphoria, revolt of the buyers mixed with a strong belief that the Delta variant will take away all the upside of the areas of the market that have been making you so much big money. Hence the collapse of the industrials, the transports, the oils, most important, the speculative stocks that have brought so many younger investors into this market. I think rampant speculation is actually one of the great ignored risk factors in this market. Whether you look at the most active stocks on Robinhood, or you check Reddit, or you examine all the deals that have been floated, there's been a ton of speculation. I don't see many mature senior growth companies coming public or merging with SPACs. It's all startups. It's all companies that aren't making money. Oh, and the Wall Street bets and Reddit names? Guys, get some boomers to help you, or a trust fund. You're going to need both before this is through. Let's start with all the IPOs and the new merchandise. I couldn't call it junk, but I'm a kind of like a Gandhi-like gardener. This week, we're supposed to get 19 deals. Okay, that's stupid, ridiculous, and idiotic, okay? The brokers are asking accounts to sell stock in other holdings so they can participate in these new crummy deals. They're pleading with them, reminding them of all the hot IPOs they've been allowed to participate in before. If money managers don't commit to buying this cycle's dogs, they know they may not get a piece of the next cycle's big winners. Okay, not every single IPO is terrible. I mean, a couple, if they come at a decent price, I like. Kaltura, I use that on-demand video software. Outbrain, that's helped me make some quarters at the street because it's a pretty good online marketing company. It really does bring in some money, brings in subscriptions. But there are way too many deals, especially in already saturated areas. I mean, you got Couchbase. Ooh, a database tech play for application developers. We don't have any of those, do we? Or Gambling.com, which does digital marketing for the gaming industry. Ooh, could use a new one. Or how about Exponential Fitness, a gym chain? Didn't we have one last week? Or Infrastructure Holdings, which has learning management programs. Holy hallelujah, boy, do we ever not need that. These are all areas we've got too many stocks already. It's the last thing we need or more. That goes doubly for all the small biotechs and analytics platforms. Memo to all you syndicate desks. We know you want to make money for your firms, but you are killing the golden goose. But these IPOs keep coming and coming and coming because they can. The brokers know there's enough money to get everything done, even if it means money managers need to sell good stuff to buy garbage. They need us more than we need them. It won't stop until the buyers simply revolt, until the syndicate desks no, thank you. I've always said the two things that can really stop a bull in its tracks: rapid rate hikes from the Federal Reserve and a flood of new stocks in the form of speculative IPOs. And this is definitely a rapidly rising tide sinking all boats. When you include the SPACs, get this, we've had 638 deals this year, 638, worth $217 billion. That is up from just 140 deals worth $47 billion last year at this time. That's insane. I mean, that's just insane. All right, well, so what are the other signs that the speculative euphoria is finally coming to an end? I don't know. Why don't we start with the meme stocks? Oh, I'm sorry, that's meme. Now that everybody knows the formula, executives are ready with insider sales the moment these memesters gun up their stocks. And that's what happened to Corsair, the high-end gaming hardware company that got memed to $40 and then fell right back to 30 when the insiders caught the memesters right and just slammed them over the head with a 2x4. Never seen a nicer bunch of guys get one. We've seen a whole host of these names give up their gains quickly, which tells you that the meme formula no longer has any staying power. It was a good trick while it lasted, but now we're all onto your nonsense. And soon even the SEC and, oh, that's going to be the Southeast Conference. Maybe even the guys in Washington are going to figure out the obvious game. We know that Robinhood, the brokerage for those who think or are young, is coming public in 2 weeks, just the absolute worst time. We're overwhelmed by stock already, right? We just don't need another fintech, especially not another big one. The Robinhood deal will most likely be set up to win because they're allocating 20 to 35% of the shares to individuals who use the platform. But if it breaks price, can you imagine how disastrous that would be? All these people would hate Robinhood. Doesn't help that lots of Robinhood investors love the airlines and cruise lines. You always see them buying them early in the morning. At least they get up early, those jokers. And they're getting wrecked right now. Perhaps the most revolting aspect of this year of speculation is in little stocks that are too small to mention on air, probably because they're not worth anything. Little nobody stocks that keep seeing these massive spikes in volume, so they hit the most active list. This sell-off won't truly end until individual investors realize that this strategy of suckering people into tiny stocks, bagging them, gunning them, and liquidating them, and just banging them out as soon as they run, that it's insidious. Again, the SEC needs to crack, a lot on their plate, needs to crack down on this stuff because I think it's basically a sophisticated pump and dump scheme. I wish I had subpoena power. Then there's the heart of speculation, cryptocurrency. In retrospect, crypto had a parabolic move that peaked right around when people started taking non-fungible tokens seriously. Who came up with that name? Hey, very much of an emperor's new clothes situation, don't you think? Any bids up there for the NFTs now? You think we'll even remember that acronym in 6 months? God, the billionaires can con you. We got billionaire-itis. Speaking of bids, have you noticed how Bitcoin seems to be hanging by a thread? Once again, a sign that the speculative excess is coming to an end. I like Bitcoin in theory, but I want to see it drag to lower levels before I consider getting back in like 12,000 when I bought it last time. Don't even get me started on stable coins like Tether that are unstable, supposed to be pegged to the dollar, allegedly backed by greenbacks as well as solid commercial paper. But we have no idea what that paper is or who's selling it to them. Tether. I'm calling it the Achilles heel of crypto. Hey, go read that Homer stuff. It's eye-opening. What else? There's a ton of speculation in oil, and without yesterday's OPEC agreement, it could have easily gone $100 a barrel. Now, though, OPEC's up in production, so there was a cascade lower as the longs bailed and all the speculative excess got drained out. The collapse of crude is actually good news for the broader market, not that anybody knows it. It means lower costs for everybody. Plus, at these levels, some of the better oils are too good to ignore. Hey, Chevron with a 5.6% yield. I know it's pronounced Chevron, but I like to call it Chevron. A lot of oils have been huge winners in 2021, and now those gains are being shredded like shredded wheat, which has very few calories. Finally, there are the hyper-growth stocks that trade at multiples to sales, not earnings. These are always, they always take a hit when the whole market gets hammered, and after a while, they cause collateral damage to even the strongest growth stocks like FAANG plus Microsoft, which is exactly what happened today. When FAANG plus Microsoft roll over, that's called a bottom. So what do you do now? I think you watch as the speculators get blown to kingdom come, while the pandemic stocks come roaring back and the big industrials try to bottom. But don't be sucked in by all these strategists calling for a 10 to 20% decline. We've already seen those declines. Open your eyes. I think they're the best ones to buy. The rails, the aerospace play, other than Boeing, which I expect to have a bad quarter, although down here, starting down for 50 points, I've been saying that. And the infrastructure stocks all make tons of sense down here because, well, they're down big. Hey, you see IBM reported a good quarter after the close? Worth looking at. Finally, pick a bank, will you? They've been crushed and they had good earnings. The banks are hostage to the ever-roaring 10-year, but especially eventually the 10-year is going to reverse itself. I mean, business is pretty good in this country and start going down in price when the Delta variant is, if the Delta variant is conquered. I have a good list coming up later in the show. The anti-vaxxers are winning right now. Hey, congratulations. Bottom line, this is a sell-off that's hitting the most speculative assets the hardest, along with finally the stalwarts in FAANG plus Microsoft. Once the speculators are blown out, the apes, whatever they call themselves, the people who together, united, will never be defeated, which is actually what the Trotskyites always said. Actually, they said the people united. Well, never mind. And the stocks that are already down huge start rallying, then we can find a tradable bottom. We're close, but the speculators haven't been fully crushed yet and ground down like nubs. I know I got to shine my shoes. These tortured souls can either leave gracefully now or get margined out when things really turn against them. That's when the pain stops. That's when Toto comes into play. Don't know Toto? Turn off the oxygen.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.